Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through all the top buzzers in trade, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the market is really shaping up at this juncture. You know, Kanishka, the texture of the market looks a little on the weaker side. We are seeing some bit of a pullback that's coming in after, we saw that up move coming in. But nonetheless, as far as Nifty is concerned, at this juncture, it has turned absolutely flat, very range-bound moves coming in. But it's really Nifty Bank that is seeing a pullback after that outperformance.
Absolutely. We did start with a very positive momentum this week, but that momentum sort of is slowing down. Nifty is just holding in the flat range with the positive bias right now. Just a few minutes back, it was in the red. Now it has shifted to the positive side, holding above that 25,120 odd level. Apart from that, Sensex in just the past 10-15 minutes, it has seen a strong recovery of 100 points, over 100 points from the previous session. It's at that 82,000 odd level. It's the Nifty Bank, like you pointed out, which is actually the one that's facing a lot of pressure today. It's down about 100 points today, and it's the one that was gaining in the previous two sessions. But yes, so that's about the major indices, and sectorally, of course, it's the day of ITs before the results later this week.
All right, so the IT pack is buzzing in trade right before the results, and that's the only sector that's doing well for itself in this market. But let's go on board a technical techie, Nilesh Jain, who's the head of derivatives and technical research, Centrum Broking, who's now joining us on the technicals. Hi, good afternoon to you, and thank you so much for joining us. Let's keep going with the show then. The first stock that is in focus today, rather buzzing, that's up in a way almost 4.5% as a top Nifty gainer, is Titan. That's in focus today on the back of its Q2 FY26 updates that have come in. According to the updates, then consumer business growth has seen 20% rise on a year-on-year basis. Q1 additions have been to now 55, and the total store count now stands at 3,377. Now, as far as the domestic business is concerned, we do see the domestic business Q1 update to be an 80% uptick on a year-on-year basis, which is in line with what we were penciling in. As far as the Q1 store additions are concerned, it stands at 54. And as far as the jewelry business is concerned, we see an overall growth of 19% on a year-on-year basis. And the surging gold prices have driven substantial ticket size increase, offsetting the marginal year-on-year decline in the buyer counts. Now, the impact of high base in Q2 of FY25 was offset by the festive season, and the gold coins continue on the growth path. As far as watches are concerned, we do see a growth of 12% on a year-on-year basis, which is also in line with what we were estimating. A couple of brokerage notes there. Bernstein is maintaining an outperform. Goldman Sachs also maintaining a buy, and so is Morgan Stanley, that's maintaining an outperform rating on Titan. And on the back of bullish brokerage notes, Titan is up in a way 4.5%.
Absolutely. Titan, in fact, is the top Nifty gainer too. But now coming to you, Nilesh, you've picked out SBI Card for us. The stock is up nearly 2.5% right now. And in the past month or so, it has given a very good return of about 15%. Do you expect this upside momentum to continue?
Absolutely. So first of all, if you see this particular counter today on derivative front, we have seen good build-up on the long side. There's a fresh POI addition of close to 5% can be seen. So good long build-up is happening, first of all. Secondly, on technical front, we have seen a good base formation, a good round the bottom is shaping up in this particular stock. And additionally, it is trading well above all long-term and short-term moving averages as well. So the momentum indicators and oscillators have also indicated that stock is likely to move towards 972,000 levels on the upside. So it's a buy at current level, buy on decline, keeping a stop loss below 900 on the upside. Immediate target would be somewhere around 960. And positional target from October series expiry point of view could be somewhere around 1,000 plus.
All right, so that's the view on SBI Card. A buy call and a buy on dips call is what Nilesh has given. But moving on to the next buzzer, that is Godrej Consumer. Now, this one also came out with its Q2 updates yesterday. Now, it has indicated a muted but inline performance amid temporary disruptions from the recent GST rate cuts. Now, around one-third of GCPL's portfolio, including soaps, shampoos, talcum powders and shaving creams, has benefited from the reduced GST rates, with the company passing on the benefits to consumers. However, in the short term, distributors and retailers, they are clearing the old inventory, that's leading to a temporary slowdown in terms of order flow and profitability. So that's the trend that the company has pointed out, and it expects that to normalize in the second half of the year. For Q2 FY26, the company expects mid-single-digit consolidated revenue growth and low single-digit volume growth in India, which is broadly in line with estimates. So that's about Godrej Consumers. But in fact, brokerages have also come out with notes. Nomura and Nuvama, they're both saying that GST transition impact is going to be short term with margins under pressure. But in Q2, but it's going to be a stronger H2 for Godrej Consumer, and Nuvama has maintained its buy rating with the target price of 1450. However, despite that inline set of number, the stock is not reacting very positively. It's down about 1.5% in trade right now.
All right, that's Godrej Consumers on the back of that news flow. But Nilesh, coming to you, picked out one from the IT pack. The IT pack seems to be doing very well today. In fact, that's the only side that's holding on to the shade of green, trading up 1.5%. And Infosys also is doing very well. In fact, that's up 2.4% in today's trading session. On the charts, what are the levels to watch out for? Because clearly, Infosys has been in a hasn't moved much. In fact, in the last 6 months, it has been in a certain range that it's been trading. From here on, what are the levels to watch out for?
Well, absolutely. Not only Infosys, but also if you look at the majority of the index heavyweight counters remain under pressure since a long time. And if you see last 6 months, this particular space hasn't moved that much. And in fact, we have seen a lot of underperformance within Nifty IT space, specifically large cap stocks. But now it seems like there could be possibility of a strong pullback move in this particular space as a whole. As far as Infosys is concerned, it seems like it has bottomed out, although it's too early to comment whether it's bottomed out, but yes, we are getting early signs of bottoming out. We are expecting a strong pullback move towards 1550, so that's the immediate target that we are expecting in this particular stock. Since the IT space as a whole has gone into extremely oversold territory, so there could be possibility of a potential pullback move. Yes, that can be played keeping a stop loss below 1440. Immediate target on the upside could be somewhere around 1550, and a break above 1550 will open further upside towards 1600. 1600 is a major barrier. That's the 200 long-term moving average resistance, and just in case if it takes out that particular mark, then probably we can say that the stock has bottomed out. But yes, it can be played for a pullback move towards 1550.
All right, so those are the levels to watch as far as Infosys is concerned, and earnings are due later this week. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side.
Welcome back. You tune in to Market Fatafat, where we are taking you through all the buzzers. And let's get going with all the stocks. Then on the technicals, we're joined by Nilesh. And Nilesh, you picked out Bharti Airtel for us today. In fact, Bharti Airtel, that's trading up 1.3%. Very strong signal coming in, very bullish signal coming in on the RSI front also. And it's also signed a very major cybersecurity contract. So that's the fundamental reason why the stock is moving. But on the charts also, what are you watching out for, and what are the levels we need to track?
Well, that's correct. Within telecom space, Bharti Airtel has been one of the preferred pick of ours. Looking at the overall structure today, this has been the 4th consecutive days of gain in spite of volatile market. This stock is trending out and looking strong on the chart as well. So we can expect a follow-up move to continue towards 2000 sort of target on immediate basis. Quite possible that in the September or in the October series we may see this counter moving beyond 2000 as well. So it's a good portfolio stock, can be added from a trading perspective as well, keeping a stop loss below 1900. It's a buy at current level and on decline, keeping a price target of 2000 plus. That's from short to medium term perspective.
All right, Nilesh, thank you so much for taking the time out and joining us and giving us all your top picks. We will let you go on that note and go to the sidelines of the Global FinTech Fest that's underway. Ankur Mishra caught up with the governor of Denmark Central Bank, Ulrik Nordgaard, to discuss the global rate path and the role of India in changing the world order. Let's listen in.
It's also important to keep things in perspective. So, for instance, for the Danish economy, our estimates in the short run, it reduces growth by 0.5%, which of course is a pity, but it's not, we can deal with that. We had a very high growth rate last year of 3.5%, which is high by European standards. Now we're down to 2%. We're still growing. Employment is still rising. So it is a drag on growth with these tariffs, but it doesn't stop growth. It doesn't cause recession. That's certainly not our forecast.
In terms of interest rates in India, yes, India's central bank has cut 50 basis point in last to last monetary policy, but overall they have kept the rates steady. And also the expectation is that in months to come, maybe there may be one more cut in near future. How do you see the interest rate trajectory, especially in Asia, versus the scenario which is there in Europe?
So in Denmark, we have a very special setup because our currency is pegged to the euro. So interest rates decision in Denmark is really about following the interest rates in the eurozone. And if you look at that and the market expectations there, they're expected to be more or less flat for the next year or two.
All right, moving on from GFF then. Now, ET Now's Anurag Shah caught up with the head of digital of Aditya Birla Capital at the Global FinTech Festival, where he spoke about the use of AI at Aditya Birla Capital. Let's go across and listen in.
ABCL, in our business loans portfolio, this entire process of data entry and also preparation of the credit assessment memo and also summarizing the assessment memo, all is now being done through AI.
Okay.
Now that is going to help you in reduction of cost per file that all of us understand very well. Somebody will say 2,000 rupees per file, somebody will say 100 rupees per file, 5,000 rupees per file. So in that overall cost, this is also an integral cost, and that comes down. So to your question, so clearly AI solutions today are either improving capacity for the organization, which is productivity like you asked, it's reducing cost, it's also improving customer experience.
You are looking after the insurance business also, and recently I have come across so many frauds happening in insurance sector where policy for somebody is having more than 20 policies. Somebody died a few months back, the policy got issued. So how your technology is helping in mitigating the frauds, particularly in insurance sector? Because if you company end up paying a fraudulent claim, the premium for honest policy holder get increased, and you are looking after the health insurance company also, sir.
So I think a very good question. Like I mentioned AI earlier for the frontline sales,
Yes,
and I spoke about underwriting. We're also using AI for underwriting.
Okay.
We're also using AI for administering our claims. So see, today knowledge and information, is of a different level and degree. You first need to have the ability of capturing this information, Anurag, right? Earlier, traditionally, you used to only capture data in tables and rows and columns. Today, you can pick up information which is semi-structured, structured. So using this information, using the context which is coming in with the data, the nuance of the information, looking at all structured, unstructured information. Today you are able to administer clearly better.
All right, we'll keep getting you more updates from the GFF. But with that, it's a wrap on this edition of Market Fatafat. Kanishka and I will take a leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.